You clicked on this because your lead situation is broken. Maybe you already know it. Maybe you're still trying to convince yourself it's just a bad week, but let me ask you something direct. How many numbers did you dial last week just to book 5 appointments, 40, 60, 80? And after all that, lead costs ate most of what you made. That's not a you problem. That's a vehicle problem. I've been in this industry 15 years. I built a $17 million issue paid agency in 2 years, 600 agents, 95% retention, $3 million a month in production. I'm not telling you that to flex. I'm telling you that because I did it on leads. And the lead structure I'm about to break down for you is exactly how we built it. Here's what nobody talks about. The real cost to generate a mortgage protection lead is $85 to $100 or more. So when your upline is charging you $60, $70, $80 per lead, they're not giving you a deal. They're giving you a margin on you. If you're spending $100 per lead, you need to close 1 out of every 2 appointments just to break even. And if your leads are already bad, low contact rates, recycled lists, already called 5 times, you're not breaking even, you're bleeding. I'm going to show you exactly how the lead game works, the real math, the 5-tier system we use, the contact ratios at every level, and the one model that changes the math entirely. By the end of this, you'll know whether your current lead situation is costing you $30,000, $50,000 or more per year in hidden losses, the real cost of a lead. Let's start here, because most agents have no idea how lead economics actually work. A mortgage protection lead, a real one, a homeowner who bought or refinanced a $400,000 plus property in the last 90 days, costs $85 to $100 or more to generate. That's the real cost. Data, postcard drops, list acquisition, fulfillment, that's what it actually takes to get that card in someone's mailbox and have them call or respond. Now, what are you paying for leads right now? If you're direct to carrier or in a bad IMO, you're probably paying somewhere between $40 and $100 per lead for the good ones. And here's what's not being said. You're paying retail or close to it because your upline is buying at $85 and charging you $70 and calling it a deal. That's not a deal. That's a markup with a smile on it. And worse, you have no idea where those leads actually sit in terms of age or contact history. Were they called 3 weeks ago by the last agent who quit? Were they recycled from a different IMO? You don't know. You're just told they're fresh leads. But here's where it gets interesting, because not all leads are worth the same price. And if you understand this next part, everything changes. The 5-tier system. Here's how our lead structure is broken down, and every number I'm about to give you is real. All 5 tiers pull from the same source: mortgage protection homeowners, people who recently bought or refinance a property within the last 0 to 89 days. That's the pond we fish in. What changes is the age of the lead and how you work it. D leads, $1 each. Contact to book rate, 1 out of 8. These are the oldest leads in the system, 60 to 89 days out. To book 10 appointments, you're dialing roughly 80 numbers. Total cost, $80. C leads, $3.50 each. Contact to book rate, 1 out of 5. To book 10 appointments, you're dialing about 50 numbers. Total cost, $175. B leads, $8.50 each. Contact to book rate, 1 out of 4. To book 10 appointments, you're dialing about 40 numbers. Total cost, $340. AA leads, $13 each. Same contact to book rate as B leads. 1 out of 4, but fresher. To book 10 appointments, $520. A leads, $33 to $55 each. Contact to book rate, 4 out of 5. These are the freshest leads in the system. To book 10 appointments, you're making about 13 contacts. Total cost, $429 to $715. Now look at those numbers side by side. To book 10 appointments, it costs anywhere from $80 on D, leads to $715 on A lead. That's not an accident. You're literally trading time for money. D leads cost you $80, but take 80 dials. A leads cost $715, but take 13 contacts. The question isn't which lead is better. The question is, where are you in your career right now? And this is where most agents make the exact wrong decision, and it keeps them stuck for years. Let me explain. Point 3, the progression strategy. If you're a new agent buying 55A leads before you can close consistently, you're not buying leads, you're paying $55 per learning lesson. And at that price, you run out of money before you run out of things to learn. Here's the progression we actually use, not time-based, performance-based. Phase 1, prove the process. D leads at $1, C leads at $3.50. Run 100 D leads and 80 C leads. Total investment, $380. Hit 12.5% contact to book on D lead, 20% on C lead, 60% sit rate, 30% close. Hit the ratios, you advance. Could be 2 weeks, could be 4. Performance decides. Phase 2, add efficiency. Add B leads at $8.50. Keep some C leads for volume. Hit 25% contact to book on 50 plus B leads, 60% sit, 30% close. You move up immediately. Phase 3, test premium. Add AA leads at $13. Run a mix of C, B, and AA. Same ratios. Prove it on 40 plus AA leads. You're approved for A lead. Phase 4, maximum efficiency. Now you're on A leads at $33 to $55, but you don't abandon the others. You work a strategic mix, D for volume, C and B for consistent appointments, AA and A for efficiency. The fastest agents hit full scale in 6 to 8 weeks. Slower ones take 12 to 16, but everyone who follows the process gets there. They earn A leads by proving themselves on D, C, and B first. Structure beats hustle every single time. But here's what I still haven't told you, and it's the reason this entire math changes completely. There's one piece of this equation that most agents never have access to. Point 4, the subsidy model. I told you at the start, the real cost to generate a mortgage protection lid is $90 to $120 or more. Our agents are paying $1 to $55 depending on the tier. Who's covering the difference? Unitrust Financial Group. Every year, Unitrust subsidizes $1.8 to $2.2 million in lead costs across our agency. That's not marketing lane. That's a real number. That's real capital going into infrastructure so that our agents can compete at a level most agencies can't touch. Think about what that means practically. An agent in a competitor structure paying full retail for A leads is spending $85 to $100 per contact. Our agents are working A leads at $33 to $55. Same lead source, same quality, completely different math. That's why 95% retention doesn't happen by accident. When agents are profitable, they stay. When they stay, they improve. When they improve, they scale. It's not motivation, it's not culture speeches, it's infrastructure, structure. Removing the financial barriers that cause agents to quit in month 3 before they ever find their footing. Insurance isn't the problem. Your vehicle is. Most agents aren't failing because they can't sell. They're failing because the economics of their current structure make success nearly impossible, and nobody told them that before they signed up. So let's be real about what we covered today. Leads aren't created equal. The real cost to generate one is $85 to $100. Most agencies are charging you close to that or marking it up. There are 5 tiers, D at $1 to A at $55, with different contact ratios and real math behind everyone. There is a right progression depending on where you are in your career. And the subsidy model changes the math in a way that most agents never get access to. Imagine working A leads at $33 to $55 instead of $85 to $100. Imagine dialing 13 contacts to book 10 appointments instead of 80. Imagine your lead cost being structured to support your growth rather than eat your commission. That's not a fantasy. That's a structure we've already built. Now, knowing all of this, there's still a question you need to answer for yourself. Because better leads at lower cost don't matter if you don't know how to close them consistently. And that comes down to one thing: daily duplicating proven processes. That's what I'm going to break down in the next video. But if you're an agent right now paying full retail for leads, $60, $70, $80, $100 per lead, and you're done with that math, let's have a conversation. Not a pitch, a conversation. Where are you? What are you producing? And does our structure actually make sense for you? Drop a comment below or hit me directly. I'm not building bodies, I'm building builders. And I only talk to agents who are serious about the process. We're 3 years into building a billion-dollar company. The structure is real, the numbers are real, and the door is still open. See you in next one.